All right, guys, this is the NQ 41025 review and outlook. Let's go ahead and get into the review. So I broke even on the second position of the play that I was looking to get on yesterday. And I also closed the first position out because there was way too much volume that kicked in, I guess, per the CPI news that came out. And price ended up pushing up to mitigate a daily point of interest, which we'll go over here in a second. And I got caught using the micro perspective to predict macro moves, which was a function of, being inside of a bearish run and getting too comfortable and not going up to the macro perspective on a daily basis and doing that top-down analysis. Not going to happen again. But overall, the price action, it's still bearish, still inside the run, despite the move that happened here on the daily, which is shown here. We had a absolutely massive price run up to this daily point of interest here, or this macro point of interest, which is about, I think it was almost 2,500 pips. No, sorry, 2,500 points. Yeah, 2,500 points, which is absolutely insane. And I believe that's over 25,000 pips. Yeah, so we'll verify that when I go over the charts here. But overall, we didn't go ahead and clear. Here, just tripping. We didn't clear this low here. We didn't clear that target. We also, despite price making this run, this is something that I want everyone to take note of. Just because you see a large price run like this, even though it looks very, very aggressive, very, very strong, all this was, if it doesn't take out, highs, previous highs, it means almost absolutely nothing. It's still within the flow of price action. And honestly, if you want to look at it, it basically was a fill of inefficient pricing there. And so what ended up happening actually was price mitigated this daily point of interest, this macro point of interest here, and is having a reaction, and we'll see what happens to see if we do continue order flow down to take out the next targets, or do we begin to push upward, or do we begin to range, But that's not for us to worry about. What we need to worry about is sticking to the bias. And as of right now, the bias is very much still bearish. I don't care that price had this very large run here. I'm sticking to the bias that we are still in a bearish run until we get some form of break of structure of previous highs. And that's it. And then I'll change my bias. But until then, the bias is still bearish. Keep it simple. All right. So let's go over here to the charts to review what happened. Right, so this is a little bit later. I meant to make this video yesterday for 4/9, but it is what it is. But like I said, price reacted from this daily point of interest, this macro point of interest, and it gave a very strong reaction to the downside here. But what I'm primarily focused on is the fact that we had a reaction here, and when I did my analysis, going down to the 2-minute time frame, I'll actually come back over here to the charts. This will be a little bit out of order for the outlook, but I'm looking for a play off of this 2-minute sponsor candle here. Now, this is based on exactly the concepts that I told you guys about in the previous outlook or review and outlook video. The reason why I'm looking at this specific candle right there that I have marked up, which is a 2-minute sponsor candle, right? And we're talking about this green one here, is based off of a few things. Well, one, the 3 principles. Number one, we had a liquidity grab, right? We broke liquidity here, broke liquidity there. Not as important, just knowing that we had some form of consolidation right there, and we decided to clear that liquidity. And then we had uninterrupted price run to break previous structure or structural low, right? Uninterrupted. So we got 3 bearish candles to break this low here. And then on top of that, the body to wick ratio favors the body on this candle. And then, even better, we have a failure for price to come back up and immediately mitigate that candle. And then we have unsupported price run, which is basically all of this, right? So all of that is unsupported price run, but you can tell, or I'm analyzing that we have two attempts, one and then two, to push back up and mitigate this sponsored candle, but we failed to do so. Which leads me to think that price is going to have some sort of reaction to push higher up to that sponsored candle and then have a reaction lower according to the bias, sticking to the bias, right? So all of this price action right now is based off of the reaction from that macro perspective point of interest. And so based off of this, all of this supported run is like, oh yeah, you missed that, Brendan. That's cool. It's based on the fact that I'm looking for the ultimate play, which is, it seems to be the last unmitigated point or the origin of this entire price run here. I want to see price retrace back up to mitigate that point of interest or this sponsored candle, and I'll enter an off of it and then move lower, aiming for those targets that we picked out on the daily. And so if we go over back to the charts here, going down to the 2-minute time frame, which is one of the macro or micro perspective time frames, you can see the unsupported run here. Get rid of that. It's not important. But the unsupported price run here, running this way, and now we seem to have some sort of reaction, and it looks like we're trying to move back up here. Now, another reason why I'm looking, another indication or support of why this move, I'm expecting price to move back up here, is if I start from the top going up to, say, the 4-hour, which is the other time frame in the macro perspective, is I see that price mitigated 50% of this inefficient pricing that was created here. And so essentially all of this, to me, this little range that was created from this low to that high, this internal range, is now balanced. And so what I would like to see ideally is price to come back up, mitigating that 2-minute sponsored candle, and then running easily low effort, high volume, low time liquidity run towards those targets here at the low here. Now that this range is basically balanced, I don't see any reason for this to not have a low effort run. Right, so that's what I'm looking for as far as the outlook goes. And yeah, pretty quick video. Peace.